What is going on, traders? Welcome back to the Traveling Trader. All right, so there's been a lot of hubbub and noise made about whether Bitcoin was manipulated, whether the crash was a manipulation tactic by a few big players, whether they really had it out for our portfolios. As a longtime crypto investor and trader, I'm going to be giving you the real scoop in this video. But more importantly, I'm going to tell you the easiest way to become a Bitcoin millionaire. This is not clickbait at all, and I don't have any program to sell you for this specific topic. However, I'm going to be showing you data about a strategy that is tried and true, a lot easier than you think. And over Bitcoin's 13-year history, really 9-year history if we're talking about being traded on exchanges, this has worked with Bitcoin better than any other asset on planet Earth. So you will definitely want to stay tuned and stick around until the end of that video. If you get anything out of this video, all I ask is that you leave it a big fat thumbs up just like this and leave it in the comment section below. Let me know what you think about Bitcoin's drop and what you think about the strategy that I'm about to unveil to you. So without further ado, let's get right into it. We will start with just some analysis about the Bitcoin crash because it is relevant to what I'm going to be discussing, and then I will jump right into the actual strategy that I discussed at the outset or the intro of the video. All right, this is my own Bitcoin chart. This is my analysis. And you could see here that I've identified Bitcoin's fractal, just a fancy word meaning its recurring pattern. This is the 1 week chart going all the way back to 2011. So a 9-10 year history. As I said, Bitcoin is 13 years old, but when it really hit the exchanges, we can really isolate Bitcoin as a tradable asset during the last 9-year window. So it continues to form this accumulation pattern, this rounding bottom, breaks out, another rounding bottom, breaks out, another rounding bottom, breaks out, another rounding bottom, breakout. And then now we saw the Bitcoin crash that occurred over the last 2 weeks. And the question is this just a continuation pattern? Are we going to continue up before the next rounding bottom? Or is this actually the start of a rounding bottom where we see Bitcoin accumulate and then break out in the same way that it has done over the last 9 to 10 years. Now, for those of you who were surprised by Bitcoin's drop, here's the reason that I wasn't surprised. Let's take a look at the Discord. I sent this update on April 20th, 2021. So that's over a month ago, right? Bitcoin at this time was still trading near 60,000, around 57,000. Okay, but still, it was not trading in the 30s. Now, I'm not going to proclaim that I knew Bitcoin would crash right then and there, but the warning signs were starting to mount. So if you were a short-term trader, that was your time to start thinking of an exit, as I stated in my update and the updates that were following this one. But we did have the bearish divergence. However, the indicator that signaled that we might be in trouble was the weekly MACD. The weekly MACD has never turned bearish, meaning the blue line has never crossed below the orange line, and Bitcoin didn't crash, and Bitcoin not crash, right? Every time the weekly MACD turned bearish, we crashed every single time in history going back 9 years. And clearly there was some resistance here in the 60K range. So the question is, was Bitcoin manipulated to drop? Well, it depends on what your definition of manipulation is, right? So if your definition of manipulation is somebody had it out for your specific portfolio, no. People need to take accountability, right? Like when you're trading and investing, this is a market, not an ATM machine. It can go up just in the same way that it can go down. And we have to come to grips with that if we want to engage in this free market practice, especially in a decentralized structure or environment, which is very different than the stock market, which is more centralized and regulated. This takes it a step further. However, those of us who trade crypto know that Bitcoin has a horrible Gini coefficient. Gini coefficient means that most of the Bitcoin is owned by a small number of people. That is a Gini coefficient, how well the asset is distributed across the masses. So was it market manipulation? Again, it goes back to how you define it. But if you define it as a few whales selling their Bitcoin on the market because they saw these signs of resistance that we spotted about a month ago, a little over a month ago, Yes, I guess you can count that as manipulation, but guess what? Whales can sell just like anybody else. Did the China FUD that we hear every single year, for those of us that are involved in crypto, have something to do with it? Did Elon's tweets have something to do with it? Yes, but it doesn't mean that they're all working together. See, you have to understand how markets work. When something is at resistance, then the culmination of news stories, and I do admit that there is an element of piling on, right? So when something is at resistance and it is in danger of dropping or crashing or does crash, the media then starts to pile up. That's how it always is. Take a look at the Cathie Wood narrative right now. In 2020, Cathie Wood was the queen of Wall Street. In 2021, they shit on her like she's some investor that learned how to trade on Robinhood just yesterday. Same thing with this, right? The China FUD. We know that that is going to come up, but it usually doesn't affect the market when the market is in an uptrend. However, when the market is at resistance, that is when news can tip the balance. And whether that news is orchestrated in a way to come out and affect the price, it could be. Whether the whales are just clairvoyant and they see that there is resistance and so they end up selling, whether the miners are the ones who start the selling pressure, whether it's the Elon tweets, which if your asset is really going to be judged based on the tweets of an eccentric billionaire, then really, what is this asset class that we're dealing with? It's a culmination of things. It's not someone who's pulling the string saying, I really want to take out your portfolio. Again, the weekly MACD has never been wrong. Go back. I've marked them here in yellow. Here in 2013, the weekly MACD crossed down. Here in 2018, coming from the 20K highs, the famous 20K highs, another bearish MACD crossover. When we had that fake bounce in the middle of 2019 that took us to around 14K, the weekly MACD was the one that brought us down once that turned bearish. And now we see the weekly MACD started to cross around April 20th, which is why I sent that update in the Discord that, hey, again, I'm not claiming that I knew it would crash right on this date, but I knew that we're supposed to be on high alert now, right? We're supposed to pay attention to what the hell Bitcoin does from here. All right, so in the midst of all of this chaos and whirlwind, you might be asking yourself, yo, Z, you talked about an easy way to become a Bitcoin millionaire. How do I go about that? All right, so here's where we start talking about dollar cost averaging. And stay with me, right? Because you hear the term dollar cost averaging, but you might not really know what that means. Dollar cost averaging is just a method of investing where you put a certain amount of money on a scheduled basis, regardless of the price of the asset. And knowing how to chart, we could talk about an enhanced dollar cost averaging model, which I'll talk about after this, okay? But dollar cost averaging is just taking a certain amount of money and putting it to your favorite asset, whether it's every week or every month, depending on how you get paid. Now, you always hear about people saying, you know, I bought the dip and it keeps on dipping. Well, two things, okay? I think people, one, buy the dip too frequently, and two, buy the dip too heavy, okay? If you invested $1,000 in Bitcoin going all the way back, let's just say going all the way back to 9 years, okay? And you can use this site called DCABTC.com. This will be your main resource for backtesting dollar cost averaging strategies. Let's just say you invested $1,000 every month going back for the last 9 years. How much how much money do you think, one, you invested total, if you invested $1,000 every month going back 9 years, and how much money do you think you'll have? Okay, I'm going to unblur this now. Bam, take a look at this. If you invested $1,000 a month, regardless of what Bitcoin's price was, through all of the crashes for the last 9 years, your total investment would be $108,000. Your total value would be almost $62 million. So for those of you that try to hit home runs with risky trades or think that you need a lot of money to make money, I mean, 9 years passes by like this, right? Like you're working your job, you're investing a certain amount of money in an asset class that you believe in or that you have high conviction in. And before you know it, it starts to mount up. Now, you might be thinking to yourself, wow, 9 years ago, you needed some kind of clairvoyance to invest that much in Bitcoin. Well, okay. Let's just take it back to 4 years. Since the last Bitcoin crash, the 2017, 2018 crash. If you invested in Bitcoin 4 years ago, put $1,000 a month, your total investment would be $48,000, right? Your total value would be $370,157. That's just 4 years of investing $1,000 a month. Obviously, you tune this according to your ability, your investment horizon. I'm not a financial advisor, so take this information and apply it however you see fit. But you could do $100 a month. If you invested $100 a month for the last 4 years, including all of the crashes and this last one that we just saw a couple of weeks ago, you'd still have $37,000 on an initial investment of $4,800. That is insane. Now, if you really want to get freaky with it, let's just say you invested $1,000 a month for the last 9 years in Bitcoin. Let us compare this to gold and the Dow Jones. Okay, so if $1,000 a month for the last 9 years, you will have today, including all of the crashes, dude, including all of the crashes, the 2018 crash, 2019 crash, the 2021 crash. If you invested $1,000, you'd have almost 62 mil. If we compare this to gold and the Dow Jones, let's see what we'll get. The middle one is gold. So you'd still be up a respectable 31%. So you would have an initial investment of $108,000. Today you'd have $141,704. The Dow Jones, you'd have a respectable 74%. If you told someone, yo, I'm up 74% in 9 years. Wow, that's amazing. So if your initial $108,000 investment, you'd have $188,748, which is respectable. But Bitcoin, there has never been an asset class that is this valuable this fast. Now, the last part of this video, how do you enhance this? Well, you apply your charting knowledge along with the dollar cost averaging strategy. So yes, you can invest $100 a month or $1,000 a month if you wanted to on a scheduled basis, regardless of what the price of the asset is. But once you see these crashes, because you know how to read a chart, or the crash that we just saw in the last 2 weeks, right? We bounced off the 50-day moving average. Once you see that crash, you can deploy cash disproportionately during that time. So whereas a traditional DCA model would invoke a continuous investment of $1,000 a month, for instance, in an enhanced DCA model, you would invest your $1,000 a month. Then when we get to the crash levels, you could say you can mark the major moving averages as your disproportionate buy points, right? Or you could just pick the lowest moving average, the 200 weekly moving average. Say if Bitcoin hits the 200 weekly moving average, I'm going to deploy 4 times more cash or 5 times more cash. So it wouldn't just be the 1,000 per month. Obviously, again, I appreciate everyone's situation is different. So you would tune this according to you, your investment horizon, your budget, your investing budget, etc. But imagine this right here enhanced with the ability to read a chart. And I have a free video on technical analysis. Check it out here, right? It is one of my most popular videos, but it is technical analysis for beginners. If you apply a rudimentary understanding of charts to this DCA model, you would even hit higher heights than this 62 million if you invested, $1,000 a month for the last 9 years. So there you have it, the DCA model, the magic and power of DCA. A lot of people want to discount this because it's too slow. But these years, you are likely going to spend at your 9 to 5 behind your desk anyway, right? Like these years aren't going anywhere. You don't need to try to hit a home run overnight and blow your whole account on 100x leverage. You don't need to do that. Anyway, traders, that is it for this video. Take what I said and apply it accordingly, according to your risk tolerance, investment horizon, your budget, etc. Whether you even want to invest in Bitcoin, that is completely up to you. I'm just shedding some light on some magic that really is just basic arithmetic. But a lot of people don't see that, they miss the forest for the trees, right? They just look at what's in front of them and really don't see how compounding can actually exacerbate over time. Hit that thumbs up button if you got anything out of this video. Leave it in the comment section below. Let me know if your mind is blown by these numbers. Let me know what you think of Bitcoin's drop, whether it is manipulation. If it is manipulation, what is the exact manipulation that you attribute to it? Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.